Welcome back, friends. This is part 2 of 3 video series which gives you end-to-end solution on how to earn huge returns in stock market using this PDR strategy. In part 1, we discussed about the core concept, and in this short 15-minute video, I'm going to tell you the process to identify stocks for this strategy. But remember, there is also an alternate and easiest way to identify stocks that I will tell you at the end of this video. Where we stopped in the previous part is we identified all three factors that we need to find quality stocks, right? And we also discussed that there is a tool called screeners which can identify stocks for us if we give some condition to that. Now, I will show you some of the websites which offer this screener for free and some offer for paid. So here's the list of websites which offer this tool called screeners. And what this tool does is it asks you to give a set of conditions, and it scans all 2000 or 3000 stocks that we have in NSE and BSE, both the exchanges. And it gives you the best stocks that fulfill the criteria that you have provided. So that's actually what screeners do. Now, the next question that you might have in your mind is, so how do we get these conditions or the formula that we need to screen all the stocks, right? So I will give you that. I provide you the formula that I use. Of course, I use 6 to 7 complex formula to screen best of best stocks. But I'll give you one formula that's very simple to execute, and you can absolutely use that and identify the stocks that you have to invest in. Here's the formula. So this simple formula gives you 35% CAGR in long run. I have well tested this on the last 8 to 10 years data, and it's absolutely giving 35% returns on an average every year. And the drawdown here, as you see, is just 19%. Remember, drawdowns are really important when it comes to investing and trading, especially trading. But even for investing also, you need to keep an eye on drawdown. Drawdown is the amount of capital reduction in your portfolio from the peak. Let's say you started from 1 lakh and you faced some consecutive losses and your capital became 81,000, which is 19,000 rupees of loss. That's very important. And in this case, it is 19% drawdown, which is reasonable. Any drawdown that's below 30% is fine because after all, we are trading in stock markets and there is a chance that markets can be bearish even for years at times, right? But you shouldn't stop investing. The core of success in stock market investing is to keep doing that at all phases of a cycle. If you take 10-year cycle, sometimes markets are in bearish phase, sometimes it's in bullish phase, sometimes it's in consolidated phase. But whatever is the phase of stock market cycle, you need to ensure that you keep investing. Remember, investing is a habit. You need to ensure that you keep investing with discipline. So back to the point, 35% here is the average. One year you might get 50-60%, other year you might get 10% or 15%. But our overall goal here is not to earn immediately in 1 or 2 years, but to earn in long run, right? And coming to the formula, as you see, what it says is Piotrowski score greater than 7. Now, as I said, you don't need to know what is Piotrowski score. It's good if you know. Piotrowski is a person who developed this strategy called Piotrowski F score. So he kind of checks 9 parameters for every company, and based on that, he gives a score from 1 to 9. If any stock has a Piotrowski score of 9, it means it's the best stock as per this indicator. And at the same time, if any stock has 1, then we better not touch that. So in this case, what we do is we consider stocks that have more than 7, which means Piotrowski score of 8 or 9. Let me spend 10 more seconds and show you what is this Piotrowski score of, or if you want to read it, then where you get all the information. And then let me also show you how easy it is to identify stocks using this condition. All you have to do is just go to Google and type Piotrowski score, and you get so many websites talking about that. Maybe the first one is Investopedia. Just click on that, and it says what this score is all about. As you can see, it takes the following categories into consideration: profitability, leverage, liquidity, operating efficiency, etc. And it gives each point to each criteria. And since we have 9 points here, the score would be from 1 to 9. So if there is any stock that meets all these 9 conditions, then it gets a highest score of 9. So if you want to read more about it, please go through these sites. But as I said, it's absolutely not necessary. It's good if you know fundamental analysis and technical analysis. But as I said, you don't need it to identify stocks for this strategy. All right. Now, what I'm going to do is I'm going to show you how to make use of this free screener tool available on internet and identify the stocks. And as I showed you, one site that's good at these screeners is screener.in. All you have to do is go to this website and register if you are not a registered customer. All you have to do is just hit on this get free account and then you can register. Since I have already registered, let me log in using my Google account, and you can see that now I'm logged in. All you have to do is hit on this tools and go to create a stock screen. What you get is this query box. There are hundreds and hundreds of fundamental queries that you can write. Of course, I am also going to show you another formula that I use for my trading purpose. As I said, you can put price to earnings. If I type PE, it gives us price to earnings, industry PE, and all other sorts of fundamental parameters. There are hundreds of parameters that you can enter into this, but as I said, I am showing you, I am revealing you the easiest strategy that we are going to use as part of this PDR, and that is Piotrowski score. All you have to do is just type PIO, and you get this drop down Piotrowski score. And all you have to do is either you can straight away type greater than 7 on your keyboard, or you also have something called show all ratios. Hit on this show all ratios and you get this greater than symbol. Just put greater than and type 7. Once after you do this, all you have to do is hit on run this query, and before that you have a small note saying that show only those companies whose recent quarter results is available. Yes, we only want companies which have released their quarterly results recently. So just check mark that and then hit on run this query. As soon as you run this query, you get a bunch of stocks that fulfill this criteria. As you can see, we do have name of the firm and other details like what is the current market price, PE ratio, market capital, and the last column is the actual one that we are looking for, Piotrowski score. If you see, we do have stocks which have the score of 8 or 9, right? Because that's our condition. Now, we do have 259 companies that fulfill this F score. So, how do we pick our 10 stocks out of these 259? So, what I would say is in NSE, we do have stocks categorized into various segments. Nifty top 50 stocks, top 100 stocks, top 500 stocks. Though we do have around 2000 to 2500 listed companies in NSE, we only want to invest in the ones that have good market capitalization. The one that you see here as the column, market capitalization. So, what I would suggest is only consider stocks that are in top 500 list of National Stock Exchange. So where do you get that list? You can go to Google and simply type NSE 500 stock list, and the first link is from NSE India. So once after you come to this page, you do have a link that gives you a list of stocks that are part of Nifty 500. I downloaded this just to save some time. Let me open that list. So as you can see, you get this list of 500 stocks, and column C is nothing but the symbol which we might be interested in. Now, let me go back to the screener list for a moment. Now, to shortlist 10 stocks out of this 252, we can do a couple of things. First is sort this Piotrowski score in the descending order. So I just clicked on this link. I see that we have all the stocks there at the top which have maximum Piotrowski score. Now, from this list, see which stock is part of that NSE 500 list. Let's say Prime Industries. This Prime Industries has a very little market capitalization of 3 crores, and so it is most unlikely that this is part of our NSE 500 list. Let me go back and check. Let me type Prime, and yeah, we don't see that. Now let's pick another stock which has a good market capitalization. Maybe this stock which has 11,200 crore. This is AstraZeneca Pharmaceutical. Let's see. Yeah, if you see, this stock is part of NSE 500 list. So you can go ahead and invest in this stock for the next 1 month. Now, how do you check this for all 259? You don't need to check them manually. All you have to do is just take an export and do a simple VLOOKUP using Excel formula so that you get to know what all stocks are part of NSE 500 list. So, as I said, all you have to do is a couple of checks. First is sort this by Petrosky's score in the descending order so that all stocks which have highest F score will appear at the top. And then the second is download NSE 500 list from internet and do a simple VLOOKUP. Even after these two steps, you might end up with so many stocks which have a good Piotrowski F score. And in that case, I would suggest you to take any top 10. Remember, it doesn't matter which stock you invest in as long as they are good in quality, because this is not a short term goal that we have, but it's a long term goal. And in the long run, it doesn't really matter in which stock you invest in if you take this criteria and start investing. So as I explained, all you have to do here is on first of every month, go to screener.in, put this condition, screen the stocks, do a VLOOKUP with NSE 500 list, and take top 10 stocks. You are good to go and start your investing process. And let me show you another formula. This formula is a little complicated, but returns that you get in this case is 40%. And the drawdown for this is 30%. Remember, drawdowns are directly proportional to the profits that you get in stock markets. So if you get more returns, obviously the drawdowns will also be a bit high. So I already revealed a couple of formulas that I use for my trading purpose. And remember, I use not just these two formula, I use 5 to 6 complex formulas which give me around 15 to 20 stocks every month, and I apply another layer of screening to get the best of best stocks from that 15 to 20, and then I only invest in top 10 stocks for that particular month. And if you also would like to know the stocks that I invest in, then all you have to do is just visit my blog 30cagr.com, and after you visit, all you have to do is just hit on my portfolio and scroll a little bit, and you get to know all the stocks that I invested in on first of that particular month. And it is so very detailed in such a way that I also put the quantity that I have bought with buy price. So you get to know all these 10 stocks. It's buy price and then the buy quantity as well. And you also have some important notes here, which tells you current capital that I have invested in, max number of stocks, and then capital per stock. And I also will tell you when is the next rebalance that I'm going to do. It's obviously first or second of next trading month. Whenever we have the first trading day, we rebalance our portfolio on that day. And I also have given a link where you can see the performance of all the stocks that I invested in the past. If I click on this, it will take me to a Google spreadsheet wherein you can see all the stocks that I invested in the past and entry dates, exit dates, and percentage of profits or losses that I got. And in the next tab, you also have the monthly summary. And in this sheet, you can focus on row number 5 and 6, which talks about PDR equities cumulative capital growth. So in the month of October, I got 1,900 profit, and in November, I got 41,000 on a capital investment of 5 lakhs. So I keep adding my monthly profit and losses to this table so that you get to see how our capital is gradually growing over a period of time. And remember, you can start your journey anytime with me. The sooner you start, the better your results will be. So after you watch this video, do a little bit of research in my blog and see if you can start this immediately from next month. Another point that I would like to stress upon is, in case if you are busy and you can't do this entire exercise of toggling between multiple websites and screening the stocks, or if you do not have knowledge on how to do this entire exercise, simply what you can do is visit my blog around 9 o'clock in the night on the last trading day of every month, so that I put stocks that we have to take very next day. So that way you can eliminate all this exercise of identifying the stocks. And also remember, as I said, I just don't use these one or two formulas. I use six complex formulas as I mentioned earlier, and I also apply additional layers of screening to make sure that the stocks that I invest in are absolutely best in class. So after doing many screenings, I come up with this list of 10 stocks. So if you just want to see the stocks that I invest in, then simply visit my blog at 9 o'clock on the last day of that month, and you get to know 10 best stocks that I invest next month. Okay, now we know how to identify stocks through screeners, or using an alternate and easiest way by simply visiting my blog 30cagr.com. In the next and final part, we will talk about an interesting and important concept, risk and money management. Meanwhile, if you have any questions on all the concepts that we have discussed in either part 1 or 2, let me know in comment section. But before that, please don't forget to like this video and subscribe if you haven't subscribed till now, and hit on bell icon. Thank you and see you in the next video.